So to start April, the Dow Jones Industrial Average gained 329 points. It's at 26,258. The Nasdaq added 99. The S&P was up by 32. And April is historically a good month for the market. The Dow has not declined in the month of April since 2005. The S&P since 2012. And the start of this quarter comes at an interesting time. Mike Santoli explains.
A big question on Wall Street entering the second quarter? Will the market shift from playing defense to offense? Looking at the S&P 500 strong 13% gain in the year's first 3 months for its best first quarter in 21 years, well, it might seem stocks were already running hard on offense. Yet for the past month, the market has held up largely because more stable, less aggressive sectors were doing well. Utility and real estate stocks and big tech giants whose business is viewed as insulated from a soft global economy. Some strategists argue the recent drop in bond yields and outperformance of defensive sectors is a warning of the approaching end of this economic expansion, or at least a longer period of sluggish activity and flat corporate profits. But another camp has a more bullish take. The market has rotated towards sturdier, safer areas temporarily to wait out a global soft patch and embrace the Federal Reserve's prolonged pause on interest rates. The current debate over Fed policy highlights this tricky fork in the road. Calls have risen for the Fed to cut rates as soon as a way to help ensure a growth pickup. But the Fed itself is betting the economy remains healthy, giving policymakers time to be patient to see how the data evolve before making a drastic move. A version of the benign market rotation scenario happened in 2016. That was another time of very low bond yields, a patient Fed, and a global economy struggling to get back on track. Under a replay of that experience, the market would now remain on alert for signs of an uptick in global growth in response to central bank stimulus efforts, and more cyclically geared parts of the market, such as industrials and banks, could take over some of the job of carrying the indexes higher as the pace of growth quickens. Well, it might seem like a delicate and uncertain transition, but that doesn't make it an implausible one. For Nightly Business Report, I'm Mike Santoli.